Bloomberg Audio Studios.
Podcasts, radio, news.
Let's check in with our next guest here, Steve Eisman, Senior Portfolio Manager at Neuberger Berman. All right, I'm looking at, I guess, Steve, you were on the Odd Lots podcast recently, and you said that you are bullish on stocks that gain from artificial intelligence power needs. What does that mean?
Well, good question.
Thank you. I'm front-running Alix, because Alix is our energy guru here.
The current GPUs use about 3 times more electricity than your typical CPU. So the grid in the United States has been under pressure now for years. You know, utilities keep increasing their CapEx budgets, and now you've put an entire new pressure on the grid. So whatever money is being spent on the grid is going to keep going up probably for the next 10 years. So just to give you just one stock, for example, you know, when utilities announce that they're increasing their CapEx budgets, utilities don't actually do anything. You know, what they do is they send you electricity and send you a bill. But in terms of construction, that's done by a company called Quanta, which is the largest engineering construction company for utilities. So
Quanta.
The only thing I would tell you is that every time the CEO gets on the quarterly conference call, he just looks happier.
That's fair.
Yes.
If demand's going to grow 5-6%,
it has nothing to do with himself. He can't satisfy all of the demand. So that's just one example, but there are other companies that benefit as well. But I think there are 3 major themes of our time: AI, infrastructure, and crypto. And I believe in the first 2, and I don't believe in the third.
So just for framing here, I mean, you really made your name through the housing crisis and betting against housing debt back in 2008. You're portrayed in the Big Short film by Steve Carell.
I had to bring that up, but okay.
I did, but just to give context, if our viewers or listeners don't know, like, you have a history of betting, having contrarian bets that pay off big time.
Yes.
What would be that contrarian bet? Out of the 3 things you just said, what's that big contrarian bet?
I don't have a contrarian bet here. I mean, I don't like crypto.
Not liking crypto feels contrarian.
Well, it's contrarian in the sense that I don't believe in it. I think the whole thesis behind it is wrong. But, you know, shorting a cult when there's no data to prove that it's wrong is a death wish. You know, so what do I mean by that? So when I bet against subprime mortgages, every month securitizations produce data. They give every single credit quality data possible. So every month you could check, is it getting worse?
Like, there were facts you could look at to back up.
Every month you looked at the fact, and that fact, credit quality, was the major determinant of the value of subprime mortgage paper. So you had a data point every month, a massive data dump. Crypto trades on Ether. You know, what does it trade? The thesis that crypto is that it's a hedge against fiat currency. So it's like digital gold. But it doesn't trade like that. It trades in perfect correlation with NASDAQ. So it trades against its own thesis. So what data point is there to show that crypto is wrong? I mean, if the deficit came down, it's not relevant because that's not how it trades anyway. So there's nothing to do.
What's your macro call here? I mean, there's a lot of folks in the marketplace saying, you know, this Federal Reserve is going to cut rates in 2024, maybe not as many times as we originally thought, maybe not as much as we originally thought, but that this economy is in good shape, but still there might be some rate cuts here. Is that kind of the backdrop that's for you, or how do you think about it?
I mean, the way I think about it is that Powell is a dove. He has always been a dove. Raising rates was completely against his nature. He wants to cut rates because he always wants to cut rates. The data is not completely in his favor, so maybe they cut once. Do I think they should cut it all? I would wait, but trust me, nobody consults me.
No one consults us either. It's very strange.
So I think they'll probably cut once, is my guess.
So does that affect, so the thesis that you have, like the infrastructure, the power demand,
and AI in general.
And AI in general, does what the Fed does
it's irrelevant.
It's irrelevant.
It's completely irrelevant.
Does it change how you play those themes or
not at all?
Timing? Okay.
I mean, this is what I think. Credit quality in the United States is fine, other than office real estate, and office real estate is not big enough to sink the economy. It's a problem. It's a regional problem. It's a regional bank problem. It's some investors' problem. The consumer's not over-levered. The housing market is not in fuego. There's a shortage of housing. So and the financial system of the United States has never been this healthy in anyone's lifetime, period. So all the things that existed prior to 2008 don't exist today. You have a very dynamic economy with some very, very powerful themes. The Fed cutting or not cutting rate makes headlines for a couple of days. But when you think about it, if the Fed cuts rates once or twice or no times, I mean, at the end of the day, who cares? It's de minimis. It's not. I mean, the Fed raising rates 500 basis points.
Yeah, that got your attention.
That got everybody's attention. The Fed cutting rates 25 basis points or 50 basis points and then stopping, like everybody get a life.
Right. All right. In terms of getting a life on AI, a lot of well, I'll just speak for myself. I'm trying to figure out how much of this AI stuff, and I'm putting in air quotes here for our listeners, is incremental tech spending, or is it just taking some money from IT or other tech budgets and putting it to?
It depends on which
AI?
subsector you're talking about.
Okay.
So if you're talking about the semiconductor sector, where it's NVIDIA or AMD, it's massively incremental. You know, if you're talking about overall tech spending, at this point, not clear. What is pretty clear is that companies like some of the IT consulting companies have no revenue growth because it's taking Peter to pay Paul.
Yep.
So, and software, unclear. So it's only very clear in hardware.
Let's overlay the presidential election with these theses. Thesis?
Thesis.
Just thesis is plural and
With the
singular?
ES, I think, maybe.
Okay.
Okay.
It's important. I took Latin for a while.
Theses, but this is a thesis. Or theses.
Okay, so what is your prediction for the election? And how does that impact? Because a lot of what you're talking about is driven by fiscal policy.
Okay, so let's
infrastructure.
backtrack for a second. So first of all, caveat, whatever I'm about to say, I am not speaking for Neuberger Berman. I'm speaking just for myself because I don't want to get into trouble. So it's May 7th. We're how many months? 5 months, 6 months from the election?
Very far.
And as far as I'm concerned, the election is baked. It's done.
Which is?
And Trump's going to win. And I think he'll win every single swing state. And this is how it's going to play. So at this point, the protesters, and what I'm about to say has nothing to do with who I'm going to vote for, what my predilections are. This is just pure analysis. The protesters on the college campuses have rapidly become the face of the Democratic Party. Not completely. But that will be solidified because I am 100% sure that in August, at the Democratic Convention in Chicago, irony, when you think about 1968, they will all be protesting there, and they'll be screaming and yelling, and they'll be screaming and yelling a lot of things that are anti-American, and the country is going to be appalled. And at that point, it'll be very, very clear that Trump will win. But as far as I'm concerned, this reminds me a little bit of August 2007. If you look back at the financial crisis, the crisis took place in the fall of 2008. But in August of 2007, subprime paper had collapsed. The crisis was baked in August of 2007. The rest was just an inevitable play. So I kind of feel about the presidential election right now. It's baked, but the only people who don't know are the voters.
All right, we'll see how that plays out in the marketplace. Steve Eisman, thank you so much for joining us.
Come back.
Steve Eisman is a senior portfolio manager at Neuberger Berman, joining us live here in our Bloomberg Interactive Broker Studio.